All right. Mic check. Mic check. What's going on, everybody? As you can tell, I'm on my laptop right now. A little change of scenery. I'm currently in Miami, Florida, getting ready to head out on a trip. So we are doing the laptop today. I hope you guys are doing great. We have an active alert literally right now for NAS. We really need to see this reject off this zone and start to really push to the downside like right now. So I had sent it as a pending order just to make sure that we could catch the move. I know I haven't really been too active on the alerts, so we wanted to definitely snag one today. Typically, I don't like to really send pendings because I like to see confirmations and things of that nature. I just think that with this big push that we had to start off New York Stock Exchange opening, obviously we left a lot of imbalance behind from that big move up. And because we've traveled so far from the, again, opening price down here, I would like to see price recover some of that move to the downside. In actuality, my preferred thing to have happen in this situation is for price to actually like come up, do what it's going to do, and then start closing back below and then executing it. Again, it was sent as a pending order. We kind of got close to TP1 a little bit there. So my only thing is I just don't want us to get tapped, like out and then it starts to move. Obviously, that would be a little bit unfortunate, but that's why we're here. We're going to see how this plays out now. So I know, again, I mentioned in the notes, depending on like the broker that you have and everything like that, is going to alter potentially the entry price slightly. But regardless, across the board, everybody should be in the trade at this point if you're going to take it. All right. So again, I am on a laptop, so a little bit of a different setup. So I'm going to be a little maybe slower than usual. But yeah, London session. I want to talk about London session because that was an amazing move. London session was definitely like the original really nice move for that like zone that I had marked off and sent to the NAS chat. So yeah, I know a lot of people during London were able to absolutely snag that one. So right now, as of right now, I don't like the way that we're like reacting around it for sells, but at this point we just got to be patient and see if we could just have price start to fall in our favor here. But I do want to see, again, price start to break and close on the 5-minute back below the range. That's what we're really looking for here. So, if the 500 pip stop loss holds, we're going to see off of the pending order. Again, right now, we just needed to like start shifting structure at minimum, obviously on the 1-minute time frame. But ideally, we want to see it happen on the 5-minute. So we're getting a nice little 1-minute rejection candle here. Okay, this is good so far. I like this. Okay, oh, sorry, let me put the chart on. So this is TP1 at 765. Obviously, it's a smaller target. TP1. We just need to break this little order block action that we got going on over here. This little 1-minute order block. This is the reason why price has been kind of holding us up here. We need to break that. So on the 1-minute, we got very nice confirmation right now. So far. Smaller time frame, 5 minutes. So that 5 minute cannot keep wicking like that. We need this thing to break and close aggressively here. What we do not want is for price to basically break new highs up above here, because we already saw price kind of like wick up and start to drop. So we want to try to maintain this high right here. What we don't want is for price to basically start breaking and closing higher up here. So let's see. Got a nice wick and rejection so far. Now on TradeX, the TP1 should be at like 775. I know on here the difference has been like about 10 points. Yeah, 10 points for 100 pips difference from what we're seeing on FXCM compared to what we see like on TradeLocker. So that's why I told you guys, like, make sure that you guys are looking at the pricing and you understand the strategy as far as like what Asian high and low is. Okay. But yeah, right now, regardless if you were on any broker, I think it was definitely over 100 pip push to the upside that it got. So I don't know. I think maybe some people you entered and got into more drawdown or a better entry than some other people, just depending on your broker's price feed and everything. But this is what I'm talking about. Like, what we need to see is for price to try to pop up above it like how it did, and now for it to finally like give us that like reverse, you know, V pattern kind of top like that. We want to definitely see this maintain and start to push. Because again, if we start to break and close above this, like that's not what we want to see here. Five minutes. So we haven't gotten technically a 5 minute break and close technically yet. A 5 minute break and close is like a pretty strong confirmation. So we're seeing obviously also, guys, the reaction off of this 5 minute fair value gap imbalance right here. That's why we're seeing a lot of decision making happening in this very second. So let's see. Come on, Naz. Let's get it cracking. Come on, we need to get a W on a trade alert. It's been too long. It's been literally like a week. So we've caught some good setups live and everything like that, but as far as alerts go, we have been pretty dry on my end, to be quite honest. So we need to get a drop here. Now, a little 1 minute order block here is proving to be a little pesky. So this is why I talk about supply and demand and all these other things, so you can kind of understand why the market reacts off certain things and why price kind of gets stuck. So you're seeing price basically tap into an imbalance and then also a 1 minute demand zone order block, and it's kind of like, you know, fighting between buyers and sellers there. We just need the overall momentum to carry us back down. Again, what I'm looking at is that we've literally extended from New York Stock Exchange opening price super far from down here all the way up to here. So we're looking for a correction. Okay, TP1 was officially hit. TP1 hit. TP1 hit. I know some people like to close early. Personally, I obviously like to hold for more. TP2 is a 1-to-1. That is not what we want to see. Come on, Nas. That 5-minute closes in about 3 minutes and change, but the 1 minute closes in about 30 seconds. But yeah, this reaction is not what we're looking for. Not what we're looking for at all. Three-minute closes in about 1 minute and 10 seconds. Yeah, bullish momentum is just really strong right now, apparently still. Oh yeah, this thing is spiking right now. So obviously anybody who hit TP1 for sure was able to finesse a profit there, but if you didn't move stops or anything there, then obviously we're gonna take a L here after TP1. Damn, man, Nas is pushing right now. So at this point, obviously the stops haven't been hit yet, but this is not like how the trade, obviously we want to see it kind of play out. As far as price action goes, not just because obviously it's in drawdown, but just the type of price action that we're getting. What we want to see is if this eventually ends up hitting stop or whatever the case is, we need to see price on the 5-minute kind of break and close back below here. And that will give us like a secondary entry later for us to take back the move. But it just depends. We got to see what it's going to do here. At this point, though, we should see this start to actually climb. 30-minute. Yeah, I'm just not willing to... I'm not really willing to buy here or go for any other different model just because of how much imbalance and how much we've already pushed into these entries right now. So, yeah. I would still focus on sells if it gives me the opportunity to. But I would need price to break and close back below here later to then go for it. And then we'll see price most likely. If we do get the breaks to the downside, what I'm looking for first is just these imbalance fills here, which will secure a 1-to-1. And then overall, we have the imbalances down here from the New York Stock Exchange move from earlier. So that's what we're looking for, is a big move to the downside to here. But we need price to obviously push for us first. So, but yeah, right now technically it's still holding, but it's a close call there. Let me check the chat here. We got 184 with us. I haven't even said hi to you guys, so. All right, I'm gonna have to go through a lot here. Let's see. As far as brokers, obviously, like, we can't really tell you what brokers to use, but you know, obviously we have partnerships with TradeX. We have partnerships with Trident Markets. So it just depends if you're looking for a personal broker or a prop firm, or if you want to go like your own route. But at Akashex, we always talk about like our partners, which is Trident for personals and then TradeX for fundeds. And everybody gets a TradeX account when you start, so. Okay, yeah, so we already talked about all this. Is the trade still active? Well, right now, if you're not in the trade, I probably wouldn't go for it yet. Just because price has not like behaved the way we would want it to once we come into entry. So we started off decent, you know, like we started getting those reactions off the zone, tapped TP1 by, I mean, on TradeX, it definitely hit a lot cleaner. On here, it doesn't look like it really tapped much, but if you look on, I have to go off TradeX prices. So I know I'm looking at the FXCM chart, but whenever I send the trade alerts, I look at a TradeX chart just to make sure that most people who are trading on the firm and everything are getting like the most ideal entry. And that one cleared 775 like by a good bit. Like here it looked like it barely tapped, but on TradeX it was like right here. So whoever put a TP1 basically finessed that. But obviously this, I wouldn't consider this a good trade the way it's playing out right now. regardless if some people closed out in profit or not, like what we want to see is a really good trade. So this wick that we're seeing on the 5-minute here, this wick right here, this is that like last little push to the downside before price started popping up. So if price breaks below that, that's what really makes like the sells look a lot more appealing again. But as of right now, like that little push to the downside is the catalyst that kind of like shifted price back up higher. So I wanted to obviously talk about the strategy because some people are probably newer and you don't really know like what we're doing, what we're looking for, or whatever the case is. But essentially we're looking at mainly this red box right here, guys. Okay, and this is something called the Asian range. And the Asian range, basically we're gonna look for price to either break this to the downside for sells, which again, London session, we saw a very clean version of that, that a lot of people took advantage of. And if not, then breaking the high for buys. Now, there's context involved, obviously. The strategy is that simple, but there's different things that kind of make it something more like that we can expect to see it work more times than not. So there's times where we might actually want to buy off of the low and sell off of the high, which is called the reversal model. But to keep it simple, usually whenever we break below, we want to see it drop, and when we break above the high, we want to buy. So this trade, again, was one of those where it's more of a retest, and I don't like retests as much, to be honest with you, unless we had come up from really far below to get into the entry. That's why I was much more comfortable with selling it again than buying the reversal model here, simply because, again, like the amount of pips that we traveled to get into the entry left a lot of imbalance and whatnot on the way up that we could still see. Like you could still see all the imbalance that was left behind here. So that's why I was like willing to take that and catch the reversal. And why I tell you that no matter what strategy you use, you're going to take losses. Like, you know, I'm sure a lot of people are probably going to take a loss on this one because it moved very fast and a lot of people don't close TP1. So it is what it is. At this point, I'm just not willing to buy even if it breaks the high. Like even if we break the high here, and if I miss a trade, like so be it. You know, like I'm not going to get upset for me personally to like not buy if it crosses up here, just because of like how much we've already pushed into it. And at some point we're going to get a really big retracement, like a really big retracement. So we'll see. We had this high over here at 19,950 more or less, and we got close to it yesterday during FOMC, but we never quite broke it. So there's going to be a lot of liquidity or a lot of reason for price to want to come and tap those highs if price is going to keep pushing. So in reality, if it breaks, like for example, the Asia high here, then breaking those targets would be like a 1.5 to 1 risk to reward ratio, for example, if you were to buy off the high and target those liquidity points, those old highs right here. It would be like a 1.5 to 1. But again, like momentum is on our favor as far as like buyers are right now, but for the most part, again, I just don't like buying high. Like I like buying low. I like buying low and selling high. And so if you told me like the Asian range was down here and we looked at it crossing the high, then yeah, I'd want to buy that to take us higher up in price. But again, compared to where we just were this morning when the market opened, compared to where we're at in this area, we are on a much higher side. So I'm more willing to sell that. You know, we just need confirmations to help us do that. So at that point, like again, I personally am not too interested in buying, but that might be a trade that works short term here. At this point, there's really two different scenarios that I would prefer to get into mostly, which would be if price starts to like break this high, and let's say we do continue up and then we start shifting back below. I really like those sells there as early entries to potentially catch like a really big move to correct like all of this big push that we're getting right now, personally. But obviously momentum and everything right now is very bullish. So if we cross above the high here, just because of the amount of buyers that are just right now pushing momentum, you might be able to like finesse a trade breaking out of the high. I'm personally not too interested in that though. So, but you know, obviously like over time, I like you guys that kind of know the strategy and what we're looking for may feel like you do like the opportunity. So like you don't gotta let me stop you from taking the trade. You know, like I just basically kind of got this one wrong in a way. You know, like it hit TP1, but obviously I'm looking to catch like a bigger move. So I don't even consider that like a really strong win. Again, there's going to be some people that just always close TP1, so they kind of finesse that one. But yeah, at least for me, like I'm not going to buy all the way up here when we just came from all the way down here. Like that's how it is for me. So at that point, like even if it does cross higher, I just look at probabilities and I'm like, man, we're going to end up coming down again. So I'd rather just let it do what it wants to do above the high. And then once we start crossing back below, I would like to sell that. And then again, you know, take it back to here, hopefully back down to here for a big move. And that would be like my better scenario. So that's where we stand right now as far as current price. So we got to kind of see how this starts to unfold now. We're about 30 minutes into the session, so I want to make sure. Let me update the notes on this first here, because there's people that are probably not on the session that have no idea what's going on right now. Okay. Let me just update the notes here, guys. Hold on. Okay. So that should be updating. All right, let's see. Now, obviously, there's a chance, too, that we just don't break the high. You know, that could also happen. So, again, for sells back below the low, it would have to be like price, at least on a 5-minute, like really breaking and closing here for me to want to trust that specific entry again. Okay. I wouldn't enter like now. Right now, we're in the middle of the zone. Right? We're in the middle of this high and low. So, personally, like that's like a... like try not to touch that zone type of area right now. Yeah, so 5-minute, we'll see how it reacts off here. Now again, when it comes to the area down here too, like price could tap into this and then reject again back up the way that it's pushed up now. So that's why I say, like, if we've already closed very deep back into the range, obviously that original sell model is like very not on the table right now, unless price like does whatever it's gonna do here and then like shows us like, hey, like we're closing below again. If we're closing below again, something like this, then yeah, at that point it will be gold time for me. Okay, and then looking at potentially take it all the way to here. This is like my main area, like 19,650. Okay. But yeah, just tapping back into, like tapping this price here is technically not really enough. We really kind of needed to show us that it wants to break back below. Okay. So we got to continue to monitor this. Again, sometimes we do a lot of teaching on the sessions, but the way that we have price moving right now, we definitely just got to kind of focus on opportunities here. We've been getting a very busy, like the live session's been a lot busier with actual trades lately. All right, I'm going to check the chat here. Let's see. Yeah, Pablo. So Pablo speaks Spanish, so I'm gonna just give him a quick little tip here. Pablo, personalmente, como ya subimos precio tanto, estoy más enfocado en prestando atención a lo que son las ventas. Lo que ahora mismo está empujando duro para arriba. So, lo que tenemos que ver es que si pasa por arriba acá, que empieza a caer para atrás de nuevo y ahí vendo. O si pasa por aquí para abajo de nuevo, entonces voy a vender ahí. Pero estoy más enfocado en ventas para regresar el precio a donde explotó más temprano. Pero tenemos que ver cómo va porque por ahora mismo todavía está empujando duro los compradores. All right. So guys, real quick, since we're kind of seeing price stall out slightly here. Real quick, during London session, we got a very clean move. So I had sent out in the NAS chat yesterday. So for those of you who are in the NAS chat, you'll see what's the timestamp on these? Oh, this is old. Hold on. Oh yeah, this is old. Okay, here we go. So this was what I was originally looking at, based off that 1 hour wick that we kind of formed, that bearish 1 hour wick finishing the New York session yesterday after FOMC. So I had a good feeling that that wick was a big indicator as far as like supply area, that we'd come up into it and basically reject off of it. And so I know a lot of you guys that do trade the London session were able to participate in that, just because at 4 in the morning when I started seeing the activation, I'm sleeping. So, I'm not taking advantage of this move. But this is really like where the strategy shines. It's a breakout is a breakout. A break and retest is a different thing. Now, it doesn't mean we can't trade break and retest. Obviously, I called it out as an alert and everything, and it has worked. But it's not like built or ideally meant to be traded that specific way. Breakout strategies, usually you want to see price like push into it, not push against it and then hoping it kind of comes back. You know what I'm saying? Like, again, breakouts and break and retest are two different things. The original breakout is here. This would be a retest of the original break, looking for it to basically repeat what it did during the break. That's what a break and retest really means, for those that don't know what that is, right? A breakout is simply like, hey, we have a certain point that we think that if price crosses there, it's going to just keep going. That's what a breakout model is, whether it's Liberty, Asia range style, or whether it's support and resistance style, whatever it is. But a break and retest is there was a break earlier. You want price to come back into that break and then basically repeat what it did during the break. And again, that's what we tried to really pull off here. But again, the strategy at its best is not meant to be basically that way. So that's why I tell people, like, usually if we want to see like a retest type of scenario, ideally what you want to have is price actually kind of like do what it's done now, where price crosses above and you just let it play out. And then once it starts to cross back below, then you start taking it, you know, because then it's kind of like it's breaking out again. It's not a retest of a prior break. You know what I mean? But again, you can't be perfect. You know, you're not going to be able to perfectly execute every single setup. So, you know, you got to plan for losses. You got to be able to take stop losses. Again, some people that took like the London setups, like if you took a London setup and you banked on a move like this, there's really no reason for you to even need to trade during New York session, really. You know, like you got to know when to stop trading, you know. But for me, you know, I didn't take anything during London because I'm sleeping. So, you know, if not, obviously I'd be happy with that. And I'd probably not even want to trade New York, to be quite honest with you. Because there's no need to potentially give back profit to the market, you know. So we got a nice little rejection of the high before we got there. So usually at that point, if we stop right before and we start getting price closing right back above that, then that makes the buys stronger in that area. But I'm just trying to like zoom out and see like the grand scheme of the whole move that we're seeing here. And again, in general, I just feel like we're going to be due to correct this move, especially if you see the higher time frames like 15 minute, 30 minute. There's just a lot of imbalance. You can see like the indicator kind of highlights it in orange. So all of this. Whatever goes up must come down, and whatever comes up fast also goes down fast. So again, right now momentum is still bullish, and at that point it's very possible, if the bullishness continues, that it will end up clearing these highs, as I mentioned before. If you want to try your hand at buys there. But personally, like, I'm just not comfortable with buying so high. So ideally, I'll just let the buys kind of fly by. And then if we start to break back below the Asia high, I would like to take a reversal model there, because that would be like the most sniper entry if we're going to sell off later in the day. Out of the two different areas that we could sell from, obviously, if I could sell higher compared to here, I'd want to do that just to have a safer stop loss and squeeze more pips. Because, you know, basically by the time we cross back below here to here, we'll basically hit Asia low with almost a 2-to-1 risk to reward ratio. And that was our original entry. So if we start coming back down into these areas, that would be like a 4-to-1 risk to reward at that point that we could get from a reversal model from this high point. So it just depends, you know, like how price starts to behave once we cross here. All right. So I'm going to check the chat and then look at... I want to show you guys the educator training series for people who are new here. Nice. Okay. Yeah, so I'm going to show you guys where the strategy's at, and then also how I usually recommend that you guys manage the trade alerts. So in general, the safest thing in trade alerts period is always, if there's a TP1, you can move your stop loss to break even. Now, usually I recommend moving the stop loss though once we hit TP2s. So once we hit TP2, where we're like at a 1-to-1 risk to reward ratio, then you'd kind of you know, really want to, for sure, at that point, move it at a 1-to-1. So there's always like recommendations, and then the real practical things that happen in a trade that with experience help you save money on losses versus other people. So what I mean by that is a TP1 is usually not enough room, at least with my trades, to basically want to move your stop loss to break even, unless you're taking a bunch of other trade alerts and you just want to like guarantee yourself some quick little profit. But that's not the philosophy I have for people that are like learning how to trade like just my strategy, right? So a 1-to-1 is where I recommend that you like a hard rule to move stops to break even basically almost every single time. Now, there's certain things that happen that we don't necessarily need to be at TP1 for you to know like, hey, I need to clip this trade. So like in a scenario like this one where, you know, price hits TP1, right? We haven't hit TP2, but then we have price give us like this candle right here. You know, from the get-go, whoever's on the live session, I'm like, hey, what we don't want is for price to basically break above this high. Whenever we call out the alerts or whenever I trade my strategy, I always use a 500 pip stop loss because that's how I've back tested the strategy, that whenever we're on the right side of the market, that's going to be a stop loss size that pretty much holds more times than not on the setups that actually work. That's the key thing, okay? Now, if we had that original 500 pip stop here when we take the trade, we had a little bit of drawdown at first, okay? Then we start moving into profit, and then we have a candle that completely breaks and shifts structure. Like this is a point right here where you gotta just like close that trade and take a 0.5% loss than a full percent loss. That's like more advanced trade management. Obviously for a beginner, somebody that doesn't trade for a long time, like you don't understand structure or like, you know, things like that. So I understand people that don't know to clip the trade here. You're like, oh, do I just let it keep doing its thing? That's why it's so important to understand things like market structure and it's just really market structure. That's the one word for it. So to keep it simple, yeah, with trade alerts, after TP2s is where you definitely want to move stop losses to break even as like a hard rule. After TP1, I wouldn't just manually do it, but you still got to ideally observe what's happening here, okay? Because if we get to TP1 and then price starts to break above the entry and it starts to get back above old highs in drawdown, like you can save yourself a whole 0.5% loss, for example, here by clipping that trade early. Now, it may not seem like a big deal to do that one time, but if you do that every time there's like a trade that starts to go against you, again, you don't want to overdo it where like you start psyching yourself out and not letting the trades play out. But there's just some scenarios like that where you do want to clip the trade early and save yourself a full loss. As far as taking profits and everything like that, I look to target usually 4-to-1 risk to rewards as like my main target. Okay, but once we start getting past like TP2 over a 1-to-1 risk to reward ratio, like around here, what we want to see is once you move your stop loss to break even, we want to see price continue to make new lows and respect structure. So as long as price continues to give you like new lower lows in the market, there's no reason for you to clip the trade. So like whenever I look for a trade, I always expect it to go 4-to-1 risk to reward ratio, like in my mind, because I don't want to psych myself out and close the trade early unless the market is telling me to. All right. So yeah, like I said, after TP2, you move your stop loss to break even. And then after that, as long as price is continuing to push in our direction, you just let it keep hitting the other TPs until we start to see a shift structure. These are things I talk about in the educator training series, so I kind of do want to show you that. Okay, so right now, again, we're still seeing the momentum from the buyers currently. This is the first time that we start crossing above the Asia high, though. I'm going to mark this point here. So these are important points to pay attention to here. So the buyers, as of right now, market structure still kind of supports the buyers to kind of work above the high. I just don't like the fact that we've traveled, again, so far into this high point. Because if I didn't buy all the way down here or here or here, for me to want to buy now here is just kind of like, ugh. So it could definitely work. Again, you could finesse a buy here and it could end up hitting 19,950 to basically grab the liquidity of these highs. It kind of seems inevitable at this point that it would do that. But usually whenever we cross above Asia high for the first time, or even the low, like for the first time, you got to be careful because sometimes the first time that it crosses, you get like a little reaction and then it starts to go. Okay, but as for the strategy, the way the strategy goes, it is breaking the high, so that does indicate buys in general. Okay, I'm just looking at the context of where we've been leading up into that entry as to why I'm a little bit less comfortable buying at a really high point compared to where we were. Okay, so again, ideally we think of things like buy low, sell high. You know, we're pretty high right now, so the only thing that would support taking a sell in that scenario is price actually like tries breaking up and then starts crossing back below, and then we can sell that, like I mentioned earlier. Like that's the idea. Okay, so let's see. But again, momentum still technically is bullish right now. So it's 1047. And just to give you an idea, like if you were to take buys, for example, off this high right now, you're looking at a stop loss that structure is kind of like this little pullback helps the fact that these buys are happening, because we saw price like try to reject off the point and now it's breaking back above. So in general, like that's what we do like to see, is price like kind of go against that point and then break back above it. So I know some people here are going to want to take the buys here. Again, you guys got to do what's right for your account. You know, some people took losses already, so make sure that you're following like your risk plan. You guys are not, you know, getting yourself into any over trading or over leveraging or revenge trading, right? We're not going to do any of that here. So again, if buys do hold above the high at this point, we're going to look to target old liquidity in the form of these old highs. Price is going to want to gravitate to take out any sellers. Okay, and that's where we started seeing selling happen, these 2 points. So 19,950 area is like a hot spot for price to want to get to if it's going to continue pushing bullish. And yeah, man, wow, price is definitely pushing heavy today. It's crazy. Yeah, unemployment claims today didn't even really play that much of a factor, really. So we're getting those first reactions off of here. So you see, the first time that we start touching the Asia high here, you could get reactions like that. So basically, if this starts to break below and starts to come back above, that would be really good signs for buys to like actually work off that area a little bit better. So we're getting that first reaction right now. Again, I think overall, like later, like the best sell scenario here for me would be for price to actually like cross above first and then start hard closing back below like that. That would be like something that would make the sells a lot more interesting. I think right now, this is just a typical like liquidity grab from Asia. Let me see, can I hold shift and like drag this? No. This laptop is cool, but when I start marking up charts, it's like a little annoying. So this point right here, when we start hitting that, you can see liquidity kind of being grabbed right now. So we'll see if this continues to push, but if that starts to kind of break and close back above here now, that's what makes those buys a lot stronger at that point. All right, let's see. Kind of want to break down the strategy really quickly. I always try to cover that at least for a bit while we're on the session. So 1 minute is pretty bearish right now. 15-minute. So the 15-minute closes in 8 minutes. It's very important that we see what this 15-minute candle does here. But yeah, overall, I don't know. I'm not, as of right now, too convinced that that's a sell-off yet. So especially if we start to like break and close above this previous high point, that's definitely what makes it a lot cleaner as well. So breaking and closing above the high and then breaking and closing above this previous structure point right here would make the buys a lot more viable at that point. So just always keep in mind, if it's the first time that we interact with the high or low for the day, it's going to be very sensitive. Sometimes it just absolutely crushes through it. Other times you see like a strong reaction. So, all right. Well, I want to keep an eye on this, but let's break down the strategy real quick for people that don't know how it goes, because we got about 8 minutes left here. Oh, okay. So I saw Zach said here, sometimes there will be signs to close a position before it hits stop loss. Yeah. I mean, any strategy, once you start to trade it for long enough, you start to know, like, if you see, you need to document, oh, Brent called a sell. Well, like I said, at that high point, at that high point in general, I liked sells, but at the high point, I like the sells. It's just the way that we are kind of like coming up into it that, you know, is the only thing that I'm thinking of right now. But right now we did get 5 minute. So the 5 minute closes in about 1 minute and 7 seconds. So obviously a 5 minute close below the high for the reversal model is kind of like what we like to see. But again, like right now structure is still like with a bullish momentum overall. So obviously if you guys take the trade alerts, like you got to just trust Brent with what he sees, you know, because he's calling it out for a reason. So now you'll notice too, guys, like there's days where the trades are just like ABC 1, 2, 3, easy, take them, go, and that's it. Other days there's gonna be a lot of like, well, there's this and then there's that, so I don't know. And so if you ever feel like overwhelmed or like unclear or uncertain, or you just feel a little bit foggy, you don't have to place a trade, you know, because if you're not like clearly seeing what's happening and you're not feeling confident in executing a position, like nobody says you have to take a trade, you know, like there's more trades that can happen later today, tomorrow, Monday. Like trading is a non-stop thing, man. It never ends. So don't like pressure yourself to have to take every single potential setup, you know. Like if I just took a L on this trade, I'm gonna be a lot more like, you know, I wouldn't say hesitant, but just a lot more like I want to be very selective about what I'm going to take next if I take something else. Because if I take back-to-back losses in a day like that, then I'm definitely like hanging it up for the day, you know. Because if you don't hang it up after a couple losses, you're just going to keep trying to make it back and you're just going to find yourself in a tough spot. So, you know, just keep that in mind, because you don't need to overdo it, or like don't do too much. Don't overdo it, okay? There's plenty of trades to take. But again, overall, guys, in this general area, long term, I do want sells. I just don't know if right now is the exact time that it's going to happen. It could. And then I'll have to readjust at that point. But for the most part, again, like this whole move, we're going to need to see a correction. At least to here, maybe even all the way to here. That would be like ideal targets long term. All right. So guys, really quickly, because now at this point we're just gonna let this thing continue to play out a little bit here. For those who want to get into like learning, you go to user.akashx.com. Log in here, and when you go to Academy, you're gonna see Educator Training Series on the bottom right, and then you'll see my profile on the top right over here. And then these are the videos that we have put together that kind of like teach the strategy and a couple other different things, such as risk management, psychology. So everything you really need, I've put it here. Basics talks about market structure, candlesticks, like the whole basics, right? Smart money concepts is the one that's like more advanced in the sense where you're hearing words like liquidity, imbalance, supply and demand. Now, anybody who's new to something, all these words sound like, you know, they sound crazy, but they never change. There's only really like 3 or 4 words that we say. And so once you hear those same words over and over and over through videos and live sessions, it no longer becomes a foreign concept to you, you know? Like there's only really 4 quote unquote complicated words that I say, which is liquidity, imbalance, supply and demand, and market structure. Like those are just 4 words that a normal day-to-day person doesn't hear in their day. But those are like basically like the 4 words that dictate like, you know, what I'm seeing in the market. So we talk about that on those videos. We talk about it on the live sessions, and they never change. So the minute that you watch a couple videos, get on a couple live sessions over and over, you're basically like, you're moving in the right direction. You just got to stay consistent. You got to stay consistent. Okay. But the Liberty strategy is the one where we actually talk about like the red box, which is the range, the Asian range, and how price behaves around it to give different types of setups. Again, the ideal, easiest type of setup happened during London, where price just, you know, moved below the low and just absolutely ran, creating a really big move and an easy move for people to catch. You know, other times where price now, like once there's like a really easy big move of the day, typically later in the day, you got to get not more creative necessarily, but the setups are not just going to come that blatantly easy compared to like one like that. It's very rare for you to get a super easy setup in general and then to get like multiple ones in the same day. The other ones, like we got to really like kind of look at it, see what's happening. All right, so higher time frame wise, the 30-minute gave a really nice rejection here. Okay, so that is good signs for sells off of that high point at that point. Again, even on the 30-minute, like 19,700 to 19,620, like this is really that big fair value gap on the higher time frame that we want to see price get into if we're going to continue to sell off. Okay, like this is the main target for sells, is going to be earliest like 19,700, 19,715. It could go a little bit lower into it, like somewhere in the midpoint here. But this area is where we're going to see price gravitate towards if sellers continue to hold here. Okay. Now, again, we could see that, you know, if price breaks above the high, we have these targets as well. So you got to be open to both scenarios and just kind of let price show us what it's trying to do. But we got a very nice 15-minute. It didn't technically engulf the candle, but it's a very strong rejection on the 15-minute from the high. Like you saw, it broke and closed very aggressively back below the low. So, you know, this is like early signs that that high should kind of stay below for now. Yeah, so if Brent definitely sniped that thing 100%. I don't know where exactly he called the high from, but yeah, definitely this high point, super clean. So if you ended up taking that, you know, again, guys, just know what you're planning to risk, what you're planning to take, and just keep it moving from there. Once we come back into here, as far as my strategy goes, you know, technically this is still in the way. It could still bounce off of here momentarily, so just keep that in mind. What you'd want to see is the same way that this kind of like broke and closed very clean below here. you'd want to see price break and close below here very clean for you to want to sell off of there. Okay. But yeah, as of right now, like this is a very nice rejection that we've been getting. So it should continue to go below the way that it's printing right now. We'll see what the 1 hour does. Always remember, like, we gotta like not forget about the higher time frames, guys. The higher time frames are very important. So if you're in doubt, Brent says this too, in doubt, zoom out. Okay. But overall, like, we have been kind of higher time frame wise printing new highs. We didn't end the day making a new high yesterday though with FOMC, so that is something to observe. Okay, like if price had broken above this high yesterday, then yeah, buying down here was very strong to keep the momentum going up. But right now, we didn't break a new high and we're still kind of rejecting off the Asia, so we could see a meltdown. It's just about pivoting. You got to be able to pivot and kind of switch your bias depending on what we see in price. All right, we're about 2 minutes past now, so let's see. Let's see. May I ask you about WR? Oh, win rate? I think is what you mean. I think I'll wait for the candle to break. So win rate is... It depends because there's really a couple different models. Like there's the Asia low break, there's the Asia high break. So I can tell you like my alerts. My alerts I always do anywhere from like, it's roughly like 70%. Like at least on my alerts have always averaged out to about 70% in like the last 2 years of me calling out alerts and just interacting. Whenever it comes to like how many setups, every day is different. I don't want you to get the impression that just because price crosses, you know, Asia low or Asia high point that you have to take a trade. So the exact win rate, it's not like this is a robot or an algorithm that just automatically takes positions at these 2 points of price. So the win rate really kind of depends on somebody's ability to use the mechanical side of it, which is understanding, okay, if price crosses here, we take this decision. But you have to use discretion as well. So discretion is knowing like, okay, we're at these points based off of the context of the whole day. Now that we're at that point, should I sell or buy? So for example, like here, I could have also been like, oh, you know what? Price had crossed back below. Now we're crossing back above. This is a reversal model. Let's go for a buy. And then we would have won that trade. So the win rate is now quote unquote different versus somebody that was like, oh, well, we're at this point and we've already pushed very far into it. So I would think we'd come back down and then you take a loss. So there's some bit of discretion. So I can only really share with you like what my trade alerts have done over the past like 2 years in Akashex. And it's been always roughly around 70%. I say roughly because sometimes it's like 66 on the low end, 75 on the high end. I haven't done like a 90% month or anything like that. I don't even really try to do that. Obviously that would be nice, but realistically, like I just haven't done 90% win rates. I don't think that everybody can do that with their system. It just really depends. Usually if people have like a 90% win rate or an 80 something percent win rate, it's because they're scalping and they have like very tight targets and it's like easier to hit TPs faster because it's like you're looking for very small moves. So for me, like I'm not looking so much only at win rate, guys. I'm looking at risk to reward. You know, like if I risk 1% per trade and I hit my targets, how much am I winning on that trade? So like, for example, I have a video that I posted, like whether you're doing funded accounts or personal accounts, it's really all the same. Like on a small account, I doubled the small account in basically like 3 or 4 trading days, but it's because I had like 2 different trades that went for 3% or 3-to-1 risk to reward ratio. And then I had one that went 2-to-1 risk to reward ratio. and then I had losses, and the other ones were like 1-to-1s. So I had like a lot of 1-to-1s, and then once in a while I had a bunch of 2-to-1s and 3-to-1s. So that's how I do things. I look at R multiples. If I risk 1%, I want to try to make 1% or more. Once I'm 1% in profit, that's where I get very stingy with moving my stops to break even, trying to make sure I clip any losses like early so that I can have my losses be 1% or 0.5%, because I'm clipping the trade early. So like, again, something like this today, I clipped the trade early. The minute that we were like here and then we crossed back above like that, I clipped the trade and I took 0.5% loss. Because I know like if my strategy is going to work, it's going to activate and we're going to push. We're not going to activate and then go back and draw down. It's possible that that could happen where you get in, you're in profit, it hits drawdown, and then it comes back. But that's not usually how the good trades of mine play out. And I look at probabilities. So if the probabilities are, oh, the trade is reversing on us after going up in profit, more times than not, it's because it's going to just hit my stop loss. So I'd rather clip my 1% loss into a 0.5% loss. So if you get good at turning, you cannot have more than a planned risk. That's the biggest thing, guys. I'm going to leave you off with that is if your risk is 1%, it can't be that you lose 1.5% or 2% or 3%, because you're going to set yourself back so far that your winners are going to have a really hard time recuperating your losses. That is the one easiest fix that somebody could do, is you cannot have more than a planned risk, and you can't be changing your risk later. Like if you like, oh, I made a mistake or I revenge traded and I doubled my lot size and you lose 2 or 3%, you can't now just start risking 2 or 3% to make up for it, because you're just going to end up blowing your account. You need to be super militant about keeping your risk, like for example, at 1%, and even closing some of those trades early to lose less than 1%. And then when you're in profit, 1%, if the price is still pushing in your direction, let it keep going. But if you start seeing that you're at 1% and price is like really giving you signs that it's going to turn around, close your 1%. You know, at least close majority partials and then let the rest keep running. So it's a conversation that we have so consistently, but it's just about repeating it and ingraining it into your head. And then also new people need to kind of like also jump on the train. But yeah, as far as like the indicators, as far as everything that I use for the strategy, again, it's all in the Liberty strategy video. I kind of like not over promised, but I like early promised the indicator thing. And like now it's like kind of annoying because I can't even give it to y'all yet. And the link thing that I was looking to do, it's not working how I thought it was. So that whole Liberty indicator thing, like we're going to have to put a pause on that for a while. But regardless, you know, you guys have the other indicators that I've told you from the video. So we just got to go off that. Again, that video shows you how to set it up. So just make sure you watch this. But guys, that's going to be it. We really got to go. So again, just keep an eye on this. Personally, again, price may want to, if price starts to break and close back above here, that is definitely like a buy at that point. And then you'd want to target like 19,950 and take out these liquidity targets. Okay, so that's scenario one that I would tell you. Again, if price breaks and closes above here on like at least the 5-minute. But overall, my ideal thing is if we can get price to actually do that and then start crashing back below, I think there's going to be a lot of incentive to take us lower. And if price actually doesn't even end up coming back up here, but starts to actually break now here and close below here, then those sells should be good, at least for some decent move here. Okay. So basically short-term buys, long-term sells is my mindset. Short-term buys potentially up here first, long-term sells off of it later, and then sells off of here later. Okay, and you'd want to take that to like 19,700 to like 19,650. 19,650 to 19,700, this general area. Okay, so I'll leave you guys with that.